Okay, now we're going to show some real-world divergence trading setups. And this one here was on the Aussie dollar, New Zealand dollar. And this was a little bit of a strange setup because it took so long to enter into. It was really, you see the long sideways movement here. But anyway, nevertheless, we wanted it to be a shorter term trade. It ended up being a little bit longer than that. But so anyway, this was the divergence. You can see the divergence here at the top, but what we really looked at was the overall divergence right here. See how price is moving higher, and this entire, now I'm going to have to do this so I can draw this here because my HTML5 charts can be difficult with little buttons getting in the way sometimes. All right, so anyway, that's what we were looking at, and what this is what we call an ending diagonal or a wedge. Now, granted, it doesn't necessarily look like a perfect wedge. A lot of times you'll see the wedge will be contracting. Most of the time the wedges will contract. In this situation, it was more just like a channel, but the defining characteristic that I use for these particular patterns, I'll still call it a wedge if we're diverging all the way through. All right, so you see how this cycle is moving higher, higher, higher diagonally, and we're diverging all the way through, even though it's not really contracting here at the bottom. And that's okay. That's all right. We're looking for the same outcome with that pattern. And then you can see the extension move here. We had a really nice extension move here that traded through the low. So it was we had an initial decline, a setback, and a decline. But since this extended, we were looking to enter into the trade. So we put the entry here, and we used the 50% on this because of the way this right here. You can see the, oops, wrong button again. Right here, you see this, all this, the resistance support right across here. Right, well, that's why we used the 50%, because we had a strong confluence there at that 50%. Okay, and you can see how price kind of moved sideways, 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 sideways. Finally, we triggered the trade here, still moved sideways for quite some time, and then we finally moved down here and tested the low. And once we got down here and tested the low, now initially I should show where the stop loss was. Stop loss was above the high, target was 127. Once price tested this low, we went ahead and got the risk out of the trade. At least we moved the stop loss to just above this swing. So we didn't take the risk completely out of the trade. We moved it just above this swing high. Okay, that's just keeping this protected, keeping the stop loss protected with this swing. Right, and you see the market never really made an attempt to even come back up here. Just consolidated a little bit near the lows here, and then continued right on down here recently to this 127%. This was another really nice setup on the 4-hour Canadian dollar Japanese yen pair. And you see how we have price moving higher here. We have the MACD cycling lower, and we also had this all the way through. You see there's divergence even back here, but then these most recent cycles diverged, and we had this strong decline right here. Now, this is a 4-hour chart, so obviously the stop loss here would be quite large. So you could use a smaller degree time frame to enter into this trade. Otherwise, you would need to, if you look at this from the 62%, you're talking about a 300 pip stop. Maybe not quite 300, but close to 300 pip stop. Now, at the same time, your initial target on this is going to be 600, just about 650 pips. Okay, so the reward to risk ratio is good. It's there. Okay, you're over 2 to 1. But the question is, do you want to use a 300 pip stop? Most people don't. So what you would do in that scenario would be to use a smaller degree time frame to look to enter into this trade. Or you could use one of our more aggressive entry methods. For example, when the market came down, made a swing, made a retest. Here, you could use a trend line entry for this. Once price broke down below the trend line, and you could trade once price trades down below this candle, the same way we enter the more aggressive strategy. Stop above this level, and then target the 127. That's just a thought. Or you could draw out the smaller degree time frames and use our top-down trading method. Look for an extension in here. You probably had an extension right in this area right here when we had the stronger decline. There's probably an extension in the smaller degree time frame that would allow us to get into the trade with a stop above the highs. Okay, so then your stop loss is just above these highs, and your target is still on this 4-hour chart. How about we go to a smaller degree time frame? Okay, here is the Euro Aussie. Price had a nice rally. We have a divergence at the top. Let me just go ahead and make a little bit of room here. Okay, we do have, so let me just do this so we can, oops. Actually, it's probably better if I do it on the indicator. There we go. And you can see here that we have price moving higher, MACD cycling lower at that high. Now look at this cycle. It's a three-wave cycle, but what do we get? What happened here? An extension. This cycle extended 162%. So we sell the pullback. Get rid of this. Stop loss above the high. Sell the pullback. Obviously, we had a pretty deep move here. Okay, but here you can see the price move right into that 127% Fibonacci extension. Okay, so a 5-minute setup. Just trying to give you some variety here so you can see that the patterns develop on all degrees of trend. Now I want to show you one of my favorite trading setups to trade. All right, this is one of my personal favorites when we're dealing with divergence. Now you see how we had the market rally here, pull back, and then rally again? Now, one of the things I like to do is when we see the trend break on this, and we'll use a regression trend channel for this, that tool we used earlier. One of the most common targets of a divergence move, a corrective divergence move, is the low area between the divergence, the points that diverged. Now, you can see here there's an example of this. When this broke down, we didn't quite reach that. So this would have more than likely been a break even or some type of locked in profits here. This is a 4-hour chart, so it's still a little bit of a move here. So we probably wouldn't have had any risk left in that trade. Anyway, but this cycle right here, once it moved to a new high and we created this larger divergence. Okay, so here you see we have price continuing higher. We have the MACD cycling lower here at this point. We could draw the regression trend channel, which is our tool right here. And you draw it on just this swing right here, just on this swing. Okay? And then you look for price to really break out of this channel. And then you target the low of the divergence points. Now remember, we're looking at this from a smaller degree time frame as well. We're looking at, oops, well, let's just move this to, we're going to change this to what we call a divergence target level. So here's a divergence target area. Now we know we have a low point between all these points that diverged. Just draw it like this. So that's our low area. Now remember, when we break out of this trend, we're looking for this cycle and this 4-hour level to continue down to that level. But we'll use the smaller degree time frames to set our stop loss. What we really like to see here is an extension move. And we can look, and I can't go back to the 15-minute chart at this level, but if you look right here, see how we have this little move to the downside, this pullback, and then this extension right here? Well, this pullback is a nice entry area with a stop above this high for price to continue down towards that low divergence target area. And that's one of my favorite trades. One of my favorite trades to trade is taking these, the 4-hour charts, or even looking at the daily chart or so, and looking for these types of divergences, and then for price to start to trade correctively down towards that low area. Okay, we use the smaller degree time frames to look to enter into those trades, as well as set our stop and then manage the trade. Okay, but folks, this is something you're going to see a lot. You're going to see a lot of this. Here's another example. Look how we have price. Oops, wrong thing here. Here we have price moving higher. We have the MACD swinging lower. Now, obviously, this is the cycle here is a double. Okay, this is a double cycle. But now, if we use our regression trend channel on this daily chart, we draw this to the high Right, you can see when we traded outside of this, we could use a small degree time frame in this area to look for some type of a setup. But look at the divergence target area, which is right here. And look at where the market came right down to. This is a daily chart. Okay, this is a daily chart. And this can give you an idea, a good idea of a direction to trade intraday or medium term. Okay, when you can isolate these types of patterns on the higher degree time frames, these are great little patterns. Great little patterns that give you a very objective view of where to target the market and where to place a stop loss as well. Or actually, it's not where you would place your stop loss, but it's where you know your bias would change as far as the direction. Obviously, looking at a daily chart, we want to use some of the smaller degree time frames, the patterns on the smaller degree time frames, to go ahead and set our stops for these particular types of trades. Okay, but it gives us a good idea of where this market's going to target in the medium term. Okay, so here you go again, another divergence right here, price moving higher, MACD cycling lower, regression trend channel on this particular cycle, divergence target area. Oops, get rid of that second one. Okay, you see the market move very close here. Before we had a pretty deep pullback, so you would have probably gotten close to the target, maybe gotten locked in some profits somewhere along the way here, and probably got taken out of the market on this move. Okay, but you can see how the market targets that area, that low area between the swing points. Okay, you can use that in a lot of different ways. And just to kind of prove that point, to show you, I actually have an open trade. Right now I have an open trade on the euro for the euro to correct to 112. All right, and I used the hourly time frame. Now this has been a little bit strung out and sideways here, admittedly, even for me, especially trading on these degrees. I wasn't looking to be in this trade particularly this long. However, it's just goes to show. I mean, this is real trading. This is what can happen. Okay, so we had the divergence here. It's on the hourly chart here as well. All right, but this is where I saw the target area. Okay, 112. The figure is right in there. So that's where I targeted for this particular trade. I actually entered over here on an extension. Okay, entered an extension after the divergence, and I targeted this 112 level for the trade. And you can see I've been in this trade for quite some time now. It's been pretty sideways in here. Pretty sideways. Okay, but no reason to change anything right here. We had this little bit of spike. This is where we actually had the Fed meeting minutes come out right here. So you saw the market, we rallied up, pulled back, stopped in the middle, and now we've just continued on sideways here. All right, and the second trade that I'm in right now, I have two open trades. The other one is the Japanese yen, and you can see this is the current chart from the daily trade plan. All right, so this is our current chart, and this is what I was looking at. You can see the divergence price moving higher, MACD swinging lower. We moved into an equal zone from the 4-hour chart, 4-hour time frame. That's where I was looking for a reaction to happen here. We had this divergence, all right, and then I entered into the trade for price to come down and target the low of this divergence area. Okay, so that's also a live trade that I'm currently in right now. And that's one thing that's nice about the daily trade plan as well, is you will see all of my current live trades. I'm very transparent with my trading. I show all my trade results. I share everything, as well as my open trades, where all the targets are, stop losses, everything like that. Right? And I think it's important for the person you're learning from to be transparent and show that these strategies actually work. Okay, so those are some real-world divergence trade examples.